Well, good morning, everyone. It is 10 o'clock, and we will call the February 8th, 2024 meeting of the LCERS Board to order. Item number 2 is a resolution for our ERS manager, Regina Story. So I'm going to head down in front, and I'm going to let the secretary read the resolution.
Whereas Regina Story was hired on July 10th, 2020 as the Retirement System Manager for the Oklahoma City Employee Retirement System and has been serving the retirement system members in that role for over 3 years. And whereas prior to becoming the Retirement System Manager, Regina held positions in the Utilities Department, City Manager's Office, and City Auditor's Office between 2011 and 2020. And whereas Regina assumed the Retirement System Manager position and was afforded very little training, yet embraced the full responsibilities of the position, and with her dedicated staff facilitated a smooth transition from the previous manager. And whereas Regina holds a bachelor's degree in economics from the University of North Alabama and a master's degree in public administration from the University of Oklahoma, and brought her financial background, high business acumen, and professionalism to the position. And whereas during Regina's tenure, the retirement system's assets under management grew from $766 million to $865 million, the number of retirees grew from 1,685 to over 1,750, all while the funding level has gone from 98% funded in 2020 to 101% funded in 2023. And whereas Regina demonstrated her dedication to the system by staying apprised of pension topics through the attendance at various educational opportunities provided by professional pension organizations. And whereas Regina has always been dedicated to the sound management of the system to ensure that city employees have a sustainable retirement and are well served. And whereas Regina and retirement system staff have greatly improved the level and quality of customer service afforded to all retirement system members, both active and retired. And whereas Regina has performed her duties as Retirement System Manager with excellence and in the best interest of the members. Now therefore be it resolved by the trustees of the Oklahoma City Employee Retirement System that they do hereby recognize that the contributions of Regina Story be acknowledged and that she be commended for her many years of dedicated public service.
All right. Chair will entertain a motion to adopt the resolution. I have a motion and a second. Please record your vote. I'm going to vote A. Resolution is adopted. Well, I've been watching the days on my calendar in my office, not looking forward to today, I have to admit. I flipped the calendar to February last week, and I realized it was only a week away, so poo-poo on that. Hey, I have to say that you know, after Renee had been here for well over 25 years, Regina came in, even though she was a board member. Being a board member, you have really no idea of the granularity and the specificity and the detail that's involved with being the manager. And to her credit, she stepped right in and absolutely did not miss a beat. Did not miss a beat. And I've told her before that even though I'm a department head here, there are days and times when I take this job as chairman much more seriously than I take my job as a department head, because a lot of people out there that need to get paid every week or every month rather, and all the documents and having to deal with Jason and the attorneys and everybody else, her being there and stepping right in just took a huge burden off of me, and I never worried about anything ever getting done, or even more importantly, getting done correctly. So I want to personally thank you, because you've made my life a lot easier, and it has been a total joy working with you, and I wish you the best in your new endeavor. So.
I don't know how I follow that. A couple of you may not know that I did serve on the board for 5 years as an elected trustee and sat in Doug Deller's spot. So this is something that I very much have had a passion for. And I don't know how many of you know that I had financial services background or any of that in the private sector, but it has been my joy and great privilege to serve in this way. But I do have to say the only reason that the wheels didn't fall off the bus were because of Mary Ellen Layton being there when I stepped in. And she knows how the sausage is made and has told us all, trained us all. Mike has definitely stepped up with this last few months with me leaving. I've just had to delegate a lot of stuff, and he's been excellent in stepping up to just handle a lot. So the excellent staff comment in here is definitely true. Also, the treasurer's office, Matt Boggs isn't here, but he was going through a similar transition when I was. There were just a lot of changes going on at that same time. So I feel like we went through a trauma together in some ways, but he was a great partner. His whole staff has been just excellent to work with, to make sure that our retirees get paid. That's our number one priority. With a small staff, all the other stuff can fall by the wayside, but we have to make sure those retirees get paid. That's our top priority. So it's bittersweet is all I've got to say, and thank you guys for this very sweet resolution.
And if you're available, 2 o'clock today, basement of 420 West Main, we're going to have a little reception for Regina, so hope you can all attend.
Mr. Chairman, can we make some remarks as well? I'd just like to thank Regina for your service, for your friendship over the years, and certainly wish you the best, and really appreciate all you've done for the city. Thanks.
Mr. Chairman, I'd like to say, I'm so sorry. Regina, we started very similar time frames, and so being able to bring me in, get me up to speed, you've been an incredible partner, and I wish you all the very success in your next adventure.
And Regina, we made a lot of sausages together ourselves, so before you came over here, and so you've been a joy to work with, and I'm really, it's a blessing to call you as a friend, and you're a true public servant, and I appreciate your attitude and your spirit. When she worked for me, she always was looking to learn more. She's a constant educator, and I know that's what I always appreciated about her, and just thank you for your service. Best of luck, and you can always come back.
Regina, I want to thank you for your service also. For those that don't know, I am the representative of the retirees, and I want to say how much we have appreciated you and how much of the time I've been told by retirees how they appreciate the service that you and your office have given all of us. Thank you.
I don't know if I'm on here. I just wanted to say I just really appreciated your time in our office too, and really appreciate everything you've done since you've been in the retirement system. Just a great person, great worker, and good luck.
Anyone else? Okay.
I didn't get a chance to work with you very long, but when I first came on and was appointed to this job, I met with Gina over there, and she gave me a stack of books and stuff. She looked at me and said, "Don't worry about that, Jim." I figured what I got myself into, but she said, "You'll work up to that." So, Regina, I didn't get a chance to work with you long, but wish you well on your next adventure.
Regina, thank you. You likewise with Bruce. You know, I've been here for about a couple of years now, and you really helped me get started. I had no idea what I was doing at the beginning, but thanks for making sure that I at least found my seat. Thanks.
Okay. Item number 3 is to approve the minutes of the January 11th, 2024 meeting. I have a motion and a second. Please record your vote. Item is approved. Item number 4 is the consent docket. We have 2 items we can take with one motion. I have a motion and a second. Please record your vote. Item is approved. Item number 5 is to ratify approvals. I have a motion and a second. Please record your vote. Item is approved. Item number 6 on the agenda is to approve the claims docket. I have a motion and a second. Please record your vote. Item is approved. Item 7 is to approve the following applications for service retirement. I have a motion and a second. Please record your vote.
Let's redo that one, I'm sure. Let's revote item 7.
Okay, we have a motion and a second. Let's vote again on that, on item number 7, please. We have a motion and a second, once again. Record your vote. There we go. Item is approved. Item number 8, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item 9 is to receive report of death, authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Okay, item 10 is items for individual consideration. Item 10A is approval of sending attendees to the International Foundation of Employee Benefit Plans training program to pursue the Certificate of Achievement in Public Plan Policy. Chair, I entertain a motion. I have a motion and a second. Please record your vote. Item is approved. Okay, item 10B is personal services contract with Gina Jordan for the retirement system manager position. As I mentioned last meeting, we'd started interviews. We'd used a national recruiting firm, and with some help from the HR department, we received a number of applications. We did interviews one afternoon, Regina, myself, and Amy. Ms. Jordan currently works in the HR department for Amy. She has worked for the city well over 20 years, I've got to believe. She's She did a real great job on the interview. She's a very detailed-oriented person, and we negotiated the contract with the help of the municipal counselor's office, so the contract is here for your consideration. Her first day is actually not until a week from next Monday. She's out, she's had some surgery, but she's working from home, so that's why you see the effective date as it is on the contract. So, anyone have any questions?
Chair, I do. I just want to, again, Gina's worked in our department, and many of you all know that we've gone through a core HR system with Oracle. We went through the transition last summer, and if it weren't for Gina's, back-end insights on how to be able to get the system set up, due diligence, just making sure that everyone got their benefits and was able to go to the doctor. I know that she'll do an incredibly good job, and really appreciate Regina's assistance in helping her get onboarded and get up to speed so that we continue to have a smooth transition. But really appreciate Gina's recommendation. She's a strong candidate.
Okay. Thanks, Amy. Okay, Chair will entertain a motion on item 10B. We have a motion and a second. Please record your vote. There we go. Item is approved. Item 10C is to receive the quarterly investment report. Good morning, Jason.
Good morning. Well, I'd be remiss if I didn't echo all of the board members' comments about Regina before I get started. But you are, and we're very pleased about that we get to continue to work with you. I'll say, in the 30 years that I've been doing this, and we see people come and go often, and it's always, we're always just a little bit nervous as to what that's going to bring and what level of involvement we're going to have. Certainly was very excited when Regina came in as the manager here. And her level of conscientiousness and concern about every detail is really something that we don't see with everybody that we work with. And I really commend you for that, from just the organization of board meetings to thinking about decisions or things that we're presenting, and to the level of detail that you organize the most recent public fund conference, which I think a lot of people don't realize the work that goes into that. But we'll miss you here. I'm happy that we'll all get to continue to work with you. So I'm going to go through the quarter report this morning. I know we've looked at these numbers. I'm going to go through in a little bit more detail, just pointing out a few things on overall portfolio. But if we turn to slide 8, back one, what this slide is showing is broad asset classes that you're invested in, not everything. It doesn't include the less liquid or alternative strategies like private equity, real estate, and the long-short equity. But we're from left to right on this slide, we're showing the light blue bars is the return for the calendar year for that asset class, calendar year 2023, and the dark blue bars is the last 10 years. And you'll note on the far left, large cap US equity, last year was up 26.3%, significantly outperforming everything else. It turned out to be a pretty good year for equities across the board, double-digit returns above expectations. Small cap was up 17%. Non-US developed markets were up 18%. Emerging markets up a little under 10. That said, all of those are 8 to 9% behind large cap US equity, so pretty big dispersion. What you don't see on here is real estate. Real estate was the worst performing asset class last year, down almost 13%, which is about a 39% differential between large cap and real estate, so pretty significant. And we know things ebb and flow. I'm pointing that out because as we look at short-term peer group rankings, your peer group rankings have dropped down a bit compared to the universe of other investors with 55 to 70% in equity. Most of that is, and if you had more US large cap, the more you have in that, the better you're going to look. If you're more diversified, you're not going to look as good right now. That said, on an absolute basis, the portfolio was up for the fourth year in the last 5 years, double-digit returns. The return of the portfolio was over 11%. So on an absolute basis, very strong. Even if you look at the last decade, ending December of 2023, large cap US stocks have really outperformed everything. And within that, it's highly influenced by the last year in large cap growth, mega cap growth, and a handful of stocks that have exposure to potential developments in artificial intelligence. We're seeing we saw a bit of a broadening out in the market in the last 2 months of the year, where small cap really bounced back. Small cap in the last 2 months of the year was up 21% in November and December. If you look at that 1 year return for small cap, up 17%. Obviously, before that, small cap was negative 5%, and it's actually sold off a bit this month. We do think diversification will still pan out. This is we're at a point in time where mega cap, handful of names have outperformed, but that's just felt that was something to highlight. If we look at the next slide, and this is really, I think, more interesting than anything, because a lot of people say, well, what do you expect to happen? Last year, coming off a year where the S&P 500 and stocks in general were down, I think we showed you some slides that the expectations would be a reversion to the mean, that we'd see a bounce back the following year. And that's not surprising. The data would indicate that most of the time, stocks are up. And what this is showing is going back to 1926, so that's 97 years, 71 out of 97 years, the S&P 500 has been positive. So to say that we're going to have a bounce back after a downturn, the likelihood is pretty probable, because most of the time stocks are up. But what I'll focus on is, if you look on the far right here, this is most of the most frequent occurrence in U.S. large cap stocks is a return of greater than 20%, which is what we had in 2023. There's been 36 times since 1926 that the S&P 500 has been up more than 20%. Last month, we did asset allocation analysis. Our capital market assumption for large cap stocks is 8.6%. That's well below 20%. It's below the average return if we averaged out all the years from 1926 to 2023, and that's just because of where we are in the cycle. It's still up a little bit from where we were a couple of years ago, when we had really increased valuations. But we know while we have an expectation of around 8.5% over the next 10 years, we're going to have some years that are really high, and we're going to have some years that bring that average down. The next slide, again, more interesting than trying to be predictive, but some might say, if we had a big up year, should we expect a big down year?
When I was looking at that previous slide, could one state that on the average over this 90-some year period, you average 10.2, but then when you look at that, 36 and 21 times, you combine those to 57, you're over 10%. You're 10% or greater, which means 1 out of every 2 years, in theory,
You're going to be up
you're going to be
10%
yeah.
or more, yeah.
Okay.
Yeah. And then you add the 0 to 10, and that's what gets you to the 71. But typically, up years are up double-digit returns.
They normally follow really bad years.
Oftentimes, we didn't highlight that, but you could probably see that in there. But the next slide is an indication that that's not always the case.
Okay.
There's been 20 times, so looking at the last two columns again, the 10 to 20% and the greater than 20%, this is highlighting the years following a 20% up year. So just because we were up 20% last year doesn't necessarily indicate that the following year is going to be a down year or a lower return. More often than not, those 0 to -10 years have followed an up 20% year. But we have over 20 periods, 23 periods where you've had positive returns following an up 20% year. The next slide, and we really talked about this last month when we looked at asset allocation, but I do think it's important just to recognize where we are in terms of yields. While yields are up substantially from where we've been hovering for a decade since the financial crisis at around 2.5% to 3%. Today we're at about 5 or 4% on the 10-year Treasury. The yield on the Barclays or the Bloomberg Aggregate Bond Index is about 6.5%, so that's intermediate to a little bit longer term, and you've got some credit in there, and that's really what our fixed income capital market assumption is based on, which is right at 6%. While we're up considerably from where we've been the last decade, we're not at historical highs. So that's to say, we don't think the next turn is going to be further rate increases, but from a long-term historical perspective, we're right in line with what the average return on the 10-year has been going back to 1962, taking out, or actually below that now, where the average yield on the 10-year was 5.9, and we're at about 4 right now. So we're not at historical highs, just as a point of reference. Now, if we just move to your portfolio on slide slide 14. I think this is always good to put it in perspective in terms of dollars. The 1 year period was a very good year. You were up over 10%. I think the actual return was about 11 something. And return on investment in a dollar standpoint, just under $90 million. We heard the stats about Regina's reign from 2020 to now, and the assets went up by about $100 million. Had we not had the 2023 in there, that would have looked even better. But you see the 3-year number, which includes the big downturn of 2022. The portfolio has grown by $67 million, and over the last 10 years, almost doubled in size from a return on investment. The portfolio return on investment has grown by close to $500 million over the last 10 years. So at the end of the calendar year, you stood at $862.7 million. The next slide just looks at the portfolio versus broad objectives and over 5 and 10 year periods. I think a lot of times we get caught up meeting month to month, talking about what's happened recently. Most importantly is long-term results versus objectives. So if we look out over the 10 year, we just dipped down at the end of calendar year 2023. That 10 year return has ebbed down a bit because you're taking off some good quarters or months at the beginning. We're really getting a lot. 2022 is impacting those numbers pretty significantly. I think we're actually have come up a bit from where we were a quarter or two before. So slightly below that 7%. On a 5-year basis, well ahead of that 7% hurdle. And then all the other metrics are risk metrics. Well, the second one is relative to your policy index, and relative to your policy index, which is what the asset allocation would suggest. We're ahead of that, so your actual managers are adding value. The bottom 3 are risk metrics. So the portfolio has been built to have a little bit less risk or less volatility through the asset allocation, as well as individual managers that may be focused on higher quality securities or a little bit of a loss protection philosophy within them. We see that your portfolio on both a 5 and 10-year basis has a lower standard deviation than what the policy index would suggest, a lower beta, which is sensitivity to the direction of the markets. So a beta of 1 would mean your portfolio is moving in line with the policy benchmark. Lower than 1 is what we're shooting for, which means we're a little bit less sensitive to the direction of the markets. And then that down capture number is an indication if the market, and the market being your policy index, is down, how much of that downside are you capturing? So think of it, the easiest way to understand that is if the custom benchmark is down 10%, you're only down 9%. You're capturing 90% of that. Over time, by losing less, your assets compound at a greater rate. We used to always show the slide that if you start with $100, you're up 25% every year, so you have no volatility. You have, you're going to end up with like $196. But if in year 1 you go up 25, year 2 you go down 50, year 3 you go up 75 or 50, you're still up, or 75, you're still up 75%. But on average, it's 25% a year. But that volatility is going to erode your assets, and you're not going to have quite as much. So that's a big factor of what we're looking for and how we're built this portfolio. The next slide is looking at the asset allocation at the end of the year. We've made, last month, we reviewed the strategic policy allocation and made some recommendations that will be reflected in changes that we're making to the policy today. But you'll see we're basically at the end of the year in line with the broad targets of equity, fixed income, and real assets. A little bit underweight real assets, a little bit overweight equity, slight underweight to fixed income, but if we include cash back in that, we're right at that 20%. The tweaks that were within equity, a little bit of, we're underweight the target to private equity by 6%, as that was just increased a year ago. From 10 to 15%, and we're continuing to ramp up toward that. This shows, this is the target, the prior targets with 5% in long-short equity. That is going to 0, and those dollars after redemptions from long-short equity will go to fixed income, as we looked at last month. Fixed income expectations now closer to 6% are rewarding investors at a much lower risk than, and much more transparent than fixed income. Than long-short equity. Now just going to the next page and looking, or a couple forward, I'm sorry. One more. Looking at the portfolio results, not only relative to the policy index, but relative to some peers. And here's where I mentioned, so if we look at the 1-year return over here on the right, the 1-year return of the portfolio up 11.36%, almost 11.4%, well above that 7% hurdle rate, trailing the policy index by about 1.4%. We've talked a lot about this year. The policy index, the 15% in private equity is represented by the S&P 500 in your policy index. Private equity doesn't track public markets. So we're assuming you have 15% more in large cap equity, which is the best performing asset class, when last year your private equity was up about, I think it was like 2%. Don't have to turn to that page, but private equity return 5.5% versus the S&P 500 up 26%. Over 10 years, your private equity is up 14.5% versus the S&P 500 up 12%. So over long term, we're getting compensated for that. In the short term, it's a big deviation. That's what's causing that. Relative to these peer groups, if we look at the 55 to 70, that was up 15%. That's putting us in the 96th percentile versus that peer group. This peer group is very broad, all sorts of investors. It's not just pension funds, it's a lot of investors, a lot of smaller investors. many of which have much more large cap equity that's influencing that. And the public fund peer group, similar story, we're a little bit behind, we're closer to that. There, it is a similar story. It's not just private equity, and it's less large cap. It's a little bit more real estate than the peer group. The median allocation to real estate in that peer group is about 8%, and so we're a little bit more than that. The median allocation to private equity is also about 8%, which is where you are on an invested basis. But I point out the standard deviation, looking at both, or at all periods, 1, 3, 5, 10. If we look at the standard deviation, your standard deviation is lower in all periods than all of those other metrics. An indication that your asset allocation is different. You have a more conservative asset allocation, and it's impacting the results relative to that peer group in this short period of time. If we go out over 10 years, your peer group rankings, the most relevant being the public fund peer group ranking in the 44th percentile over a 10-year period. So more higher return and significantly lower risk. A standard deviation of 9.3 versus the median in that peer group of 9.5. And I think this is indicative of how this portfolio has been built. Mm-hmm.
On the 1-year portfolio versus policy index, being that are essentially the private equity, which didn't perform as well as the large caps, is being weighted at the same, or being
measured
at the same. What about in 10 years? Because and you mentioned that private equity has done better than the large caps over the last 10 years. So by that virtue, our total portfolio should be higher than the policy index. Okay, sorry. I think I flipped those numbers around.
It is.
So that's where the 10 years you see that we have about 46 basis points higher return because of that. Is that
It's not just private equity, it's some other things, but yes, private equity is adding to that outperformance over a 10-year basis.
Okay, great. Thank you.
So any questions on the portfolio before we move to a couple other action items? Okay. I'm done with portfolio discussion. I don't need to go through the January report unless anybody wants to. I was going to go over the 2 action items.
Just one question real quick on that. Earlier you'd showed the 10-year that we were above the 7%. Is that from a different time period?
Do all of them at once. Okay.
No, it's,
Oh, no, okay. I was thinking, you're right, never mind.
yeah.
Okay.
It's just
right
it's
below.
actually, if we go back a couple, last quarter and the quarter before, I think we were down closer to 6.
Yeah.
And it's bumped back up again. And if you go back to the end of 2021, we were closer to 9 on a 10-year basis. 2022 really eroded that.
All right, thanks.
Okay, let's go ahead and let's move to item D, the monthly investment report, real quick, and then
I was going to skip over that unless
let's
anybody,
skip over,
yeah.
unless anyone has any objections.
It's
to
for
that, we'll skip
information.
over the ASAP for this month, and let's move to item E, approve investment policy statement.
So the changes here are on page 4 and 5, and these are just reflect the decisions or the discussion that we had last month around the strategic policy targets. So this is modifying the policy, lowering the overall equity allocation from 65 to 60, and really where that's coming from is we're eliminating the long-short allocation. It's going from, it's coming out, so it's not going to 0, it's just coming out completely, which is effectively 0. A slight tweak to international and emerging. The international is going up for, we're making sure that our U.S., non-U.S. allocation is consistent with global market cap, which is about 60-40. So when we add large and small cap and the international merging together, we're at that global market cap. And then the fixed income going from 20 to 25 and keeping the pro rata allocation among the underlying strategies is effectively the same, but because the percentage for fixed income overall is going up, those numbers change a little bit. But this is purely reflecting the mix that we honed in on last month. And then the other change is on the next page, which would be to your policy index that we measure against. Again, just bringing this in line with what we are doing. So the S&P 500 does come down a little bit because large cap is coming down, but private equity will still be measured against that. It's the 15% large cap, 15% private equity that over the long term, we're measuring all of that against the S&P 500. The EM is coming down 1%. ACWI it's going up slightly. That's the non-US, and then the bonds. I mean, actually, that's the bonds that's going up slightly from 20 to 25%. It's hard to read, but this is to mirror the changes to the strategic policy.
Okay. Does anyone have any questions? Hearing none, Chair will entertain, I'm sorry, we're going to take these individually, but let's go on to item F, and then we'll
Okay, so item F is to make a full redemption from the K2 Ascent platform because our asset allocation, we're removing long-short equity. Now we have to take the administrative step to actually get out of it. They have quarterly liquidity with 90-day, some of them, the notice for the underlying funds is slightly different. We've provided the withdrawal document to Regina and Paul, and these would be effective June 30th, but we need to get the redemption in now for June 30. For most of them, with the exception of one fund, which would be July 31. That said, these redemptions are for the redemption date. The money coming back will, each of the underlying funds have some unique distribution provisions, so it won't all come back in July or August. It's going to come back over the course of probably the next year. And as that comes back, we will reallocate it into the portfolio based on the target asset allocation. So we're recommending that you put in a full redemption from the K2 Ascent platform.
Okay, any questions on item F? Okay, we're going to take item C through F individually. So Chair will entertain a motion on item C, investment report. You have a motion and a second. Please record your vote. Item is approved. Chair will entertain a motion on item D. Have a motion and a second. Please record your vote. Item is approved. Now, item E. Have a motion and a second. Record your vote. Item is approved. And item F. Motion and a second. Please record your vote. Item is approved. Okay, item number 11.
This
I'm
really
sorry.
isn't on the agenda, but I had just one more comment. I handed out this table. Post-COVID, we've kind of gotten away from regular updates from managers coming in, and I talked to the chairman and just thinking with a new manager coming on, might be good to put a calendar out for the full year to bring managers in for updates. So we're proposing this with your long-only managers, not all the private equity managers that may not have a lot of dollars. Having one manager in March, one in April, skip May, 2 in June that kind of complement one another, 1 in July, 2 in September, and one in October. So we'd have a few months where we wouldn't have managers. Most months we have 1, 2 months we have 2 coming in. So that makes the board meetings a little bit longer, but I think we'd get through all of your managers this year, your traditional managers.
Okay. Okay, item number 11 is comments from board, staff, and citizens. Again, 2 p.m. today, basement, 420 West Main. Big reception, good food, cake, and punch. Can we take a group picture with Regina? Sure, sure.
They're having a meeting in here, so we need to.
We'll go in the hall. Any other comments? Hearing none, we are adjourned at 10:46.